Hello, everyone, and welcome to another ASUG Partner Webcast. My name is Maureen McInerney, Partner Marketing Specialist here at ASUG, and I'll be your moderator for this event. I'd like to thank everyone for taking the time to join us for this presentation. Today's webcast is being recorded. The link to the recording and the accompanying slides will be posted to the ASUG website, and all registrants will receive an email with the link to those materials. I'd like to remind our audience members that you can submit your questions at any time during the presentation by clicking the purple Q&A button at the bottom of your screen. Today's webcast is What's New in Transfer Pricing and Actual Costing in S/4HANA. Our speakers today are Paul Ovigel from ERPfixers and Janet Salmon, Chief Product Owner for Management Accounting at SAP SE. And with that, I'd like to hand it over to Paul.
Thanks, Maureen. Hello, everyone, and thank you for joining this webcast. We're going to talk about the topic of transfer pricing and actual costing in S/4HANA. My name is Paul Ovigel. I'm going to take you through the next 3 or 4 slides and then hand over to Janet. So first of all, what is ERPfixers? We are a platform of SAP experts that can assist with short-term projects and optimization assessments in most of the major SAP modules. If you want more information, you can go to our website or you can email us on info@erpfixers.com. Now, one of the areas that we're getting a lot of requests about is helping customers to map out their path to S/4HANA. So we normally get questions like, what can we do to prepare for S4? Should we implement certain functionality now, or should we wait until S/4HANA? Are there certain custom solutions that we have right now that will be resolved with HANA, and so on? So we've been putting out a number of webcasts almost monthly to educate SAP customers on what some of the new functionality is and what their options are. You can access our website through the ASUG website. So if you have any questions, you can, on the ASUG website, you can click on our link and it will take you directly there. So as I mentioned, we are helping customers along their S/4HANA path. And we have gotten questions specifically in the material ledger module. It's come up frequently because it is now mandatory with S/4HANA. There's been a lot of misconceptions out there about the functionality and the requirements. And I can't think of a better person than the speaker on this webcast to clear some of this up. So I'll introduce the speaker, Janet Salmon. She's currently the Chief Product Manager for Management Accounting at SAP in Germany and specializes in the CO modules. She's worked to drive developments to bring together financial accounting and controlling in S/4HANA Finance. She's the author of Controlling with SAP, A Practical Guide, SAP HANA for ERP Financials, SAP S/4HANA Financials, and First Steps in SAP S/4HANA Finance. Basically, Janet is the person in charge of the team that comes up with the development for most of the things you see in S/4HANA Finance, particularly the CO module, but now that it's integrated, she's a pretty good source of information for most of the new and old functionality in the FI and CO module. So the agenda for this webcast is talking about the Material Ledger and Universal Journal, what's changed in transfer pricing, what's changed in actual costing, what difference the new currency options will make, what Fiori reports can be utilized for actual costing and transfer pricing. And now I'll hand it over to Janet.
Thanks very much, Paul. So I'd like to start by talking just about what happens as you move to the Universal Journal and what happens with the Material Ledger. What does it mean? And I think most people who've had anything to do with SAP, whether you've been to the events, whether you've been listening to the webcasts over the last few months and years, will have heard the major innovation in S/4HANA is that we take our accounting documents and merge them with the controlling documents. So it means your general ledger and profitability analysis are no longer at different levels of granularity. You're both talking about revenue, but historically, your general ledger was typically a very aggregated view, show me the revenue by company code. And in profitability analysis, it was extremely granular. So it would show me the revenue by product, customer, region, and so on. And we spent an awful lot of time, or certainly I did, talking about the trio general ledger, management accounting, profitability analysis, because there was a lot of confusion right up the front about how can it be that the cost elements merge with the accounts? Do I lose what I formerly had with secondary cost elements, and so on and so forth? And the little box on the right, the material ledger box, it didn't maybe get quite as much of a focus in the early days. But actually, just as we merged the general ledger, profitability analysis, management accounting, and asset accounting, we brought technically a lot of the material ledger tables into the Universal Journal. So if you look at the table today, you'll see not just the familiar entities that you know from the general ledger, so company code, trading partner, business unit, profit center, and so on. You'll also see that real nitty-gritty data for every single material movement. You'll see which material was it. You'll see things that you never knew in the general ledger before, so things like special stock types, sales order stock, project stock, supplier stock, and so on. And it's really about bringing all those things that relate to inventory management in terms of managing the value of your inventory into the Universal Journal. So if you think back to that very first statement that I made about general ledger and profitability analysis moving together, typically your general ledger was very aggregated and your profitability analysis was very fine. We had the exact same situation in the material ledger, where in any goods movement, you'll typically have lots and lots of materials moving from A to B, being delivered from outside, being issued to a production order, being issued to a sales order. And typically that view would all be aggregated in the general ledger, and you'd just have it hitting a couple of accounts and maybe hitting a profit center. And now what you've got is that nitty-gritty, every single material movement has a line in that document. And think of that document line now as being logically extended so that that material movement, goods from A to B, goods being assigned to a sales order, a production order, whatever, and that view being extended to include not just the account information, but also the profit center, the functional area, any of those accounting reporting entities. And the reason why we've done that is to try to get to that out-of-the-box multi-dimensional reporting. We don't want you to have to move this data into an enterprise data warehouse and start manipulating it to try and bring it back together so you can make sense of that data. If the data is intrinsically in the document that you first capture, that's what we want to see in the Universal Journal with all the detail attached. And of course the same applies for that box down the bottom for the asset accounting piece. Just like you typically have material documents with lots and lots of lines in it, you'll also typically have asset documents where you're acquiring multiple assets and then assigning them to things like an account or a cost center to extend the document in detail. So if we look in detail, I hate to leap from the high-level marketing picture straight into the nitty-gritty, straight into the table, but I think sometimes it does help to just have a little look under the hood. And what you'll see, whoops, if I didn't click so quickly, what you'll see within the Universal Journal is an include that takes in all the details that you would normally have associated with the material ledger. So don't worry too much about the fields, but what you've got in there is things like price control. Is it a standard price control material? Is it moving average price? Are you using actual costing, or are you just using the material ledger to have that separation of the different prices? You've got all the special stock types in there, so you can see things like sales order stock, project stock, vendor managed inventory, and so on. You've got all the price units. And technically what happens as we do the conversion, we don't just marry the FI and CO documents or marry the asset accounting documents and the FI and CO documents. We do the same with the inventory accounting documents. So we look into those tables, we pull out the documents, and we try to marry them with what we find in terms of the accounting documents. So when you do a conversion, all your inventory valuation documents will become part of the Universal Journal. That Universal Journal will become more granular, not just in terms of supporting profitability analysis and supporting overhead cost accounting, it's also going to have all that detail around the material ledger. So why do we do that? It's really so we get that multi-level, multi-dimensional reporting. So this is the example that we all tend to use. It's the trial balance. On the right, it looks pretty standard. It's a list of accounts by company code. But what you see on the right, on the left, is really what we think makes the Universal Journal special, namely all those different reporting dimensions. So if you think about it, you're going to be able to drill down by material, both the raw materials, the semi-finished, the finished products, and so on, and by all those other material related dimensions. So it really is a very powerful reporting tool, enabling accountants to drill down from that high-level picture, you know, what are my material values in France, right down to the nitty-gritty of what are the individual documents and individual materials behind those numbers, and to really interrogate that data. And I think it's quite a powerful story that we have there with S/4HANA. Of course, the moving into the Universal Journal, that happened with 1503. Essentially, you couldn't avoid it. We looked if we could find inventory tables, we merged them into the Universal Journal. Where we started to get the questions that Paul's been talking about was in 1511 when word went out that the material ledger is compulsory. And I think this is where SAP themselves haven't done a particularly good marketing job. Because in the past, we've used material ledger to mean two things. If you look at a lot of the blogs, books, and so on out there, we tend to use material ledger as a synonym for actual costing. And actual costing makes absolute sense in certain industries. It's hard to imagine customers in the food industry or in the chemical industry not doing actual costing. You know, there's countries where it's a legal requirement. Almost everybody who's got an SAP system in Brazil has got actual costing on. But that's not what's become compulsory. What's become compulsory is simply that technically we've got in the Material Master the material ledger view that just says I've got optionally 3 different valuations for my material, nothing more. When you move to 1511, the material movements tables convert. It's a table called MatDoc now. A lot of those totals tables go away, so you should get performance because some of those locking issues are going to disappear. And you've got one material valuation solution. So whereas I used to be sitting there with customers and saying, you know, generating that extra material ledger document, it's going to give you about a 30% hit with every document you write, plus then the cost of doing actual costing. That isn't an issue anymore. You're always going to update those 3 currency fields, those 3 price fields for the material ledger. Technically, your material ledger is active, and technically, you're in the material ledger structures. But actual costing remains optional, and you're going to go back to the questions you had before, is actual costing something that I need for me? But all that's going to happen if you make the move, if you're a retailer and the mere thought of doing material actual costing terrifies you because of your volumes, you really shouldn't notice, because all you're doing is extending the inventory tables to have that extra view. So just to give you an idea what a material master will look like after you've run that conversion, I've got a screenshot here. And the screenshot, essentially, it's what the material master looks like when the material ledger is active. You can see there's that little flag that says the material ledger is active. There's the ability to drill down into CKM3, into the material price analysis. But the key thing is the default is transaction-based, which means it's essentially offering you either a standard price or a moving average price. The choice of which you do essentially remains the same as before. So the default is you've got the transaction-based pricing. You choose whether you want to do moving average or standard. If you're really, really, really concerned about performance, then you should go to the standard. You should go to standard price and not have the statistical moving average price being written. And what you've And your option then is additional currency. So what you had in the past was MM was traditionally in company code currency, so traditionally in the currency of the plant, and you didn't have an option to put it into group currency. What you get with the material ledger is you would always have the option of having all your inventories in group currency, and then you have further options. It might be that you're in a country that requires an index currency or a hard currency, whatever you think you need for that third currency now. So that's the material ledger in the Universal Journal. So really, you don't need to do anything in preparation for that. The Universal Journal conversion will automatically take your material, your inventory management documents, and make them part of the Universal Journal. And if you do a conversion to 1511, we'll do the conversion. We'll take all your material masters and convert them so the material ledger is active. We'll generate that group currency view and calculate it on the fly. You shouldn't really notice. We've got some notes that explain the process. And so one of the notes is 2206-980, which explains how the data model gets changed and what we do. But really, you can do that at any time. The next two pieces are things that you probably need to think a little bit more about. Now, what's been interesting as we move to S/4HANA is that the transfer pricing functions have actually been around for about 20 years. I can remember doing workshops back in 46C, telling customers what was new with transfer pricing, why they should use group valuation, and so on and so forth. And I did that for probably 2 or 3 years as 46C first came out, and then at some point everybody started to doing that sort of thing in BW. And my life went really quiet until about 3 or 4 years ago when people started to say, well, you know, with this S4 thing, I'm going to try and get everything onto one instance. And one of the reasons to go to single instance would be to get a group valuation view in my data. So I'm just going to wait for the picture to come through. So if we think about the Universal Journal, we've talked about it bringing together data that we previously knew as being in the general ledger tables, in the profit center tables, in the CO tables, in profitability analysis, and in the inventory tables. What we've always had, but not everybody used, was the option to provide multiple valuations here. So what we have is the option, alongside what goes on at legal entity level, where Company 1 is producing goods, it's selling them on to Company 2, Company 2 is selling them on to Company 3, and Company 3 is selling them to the final customer. That's the transfer price information that every system will inherently be holding. But we have additional options. One of those is to put the group view in. And I say the group view has become very, very popular recently. And the idea with the group view is it's working in group currency, so that field we saw before saying, in addition to my local currency, I've got every value being kept in group currency. It's also the idea that I eliminate any intercompany profit. So while Company A is selling to Company B and adding an intercompany markup, from a group perspective, I'm just passing my actual costs along that flow, or even just including my standard costs. So I can already eliminate the markups that I would typically do as part of my consolidation process, which of course, if I start using that group view for my reporting, takes out a lot of manual work that we find a lot of our customers are doing at period close. And the idea is you can pass those either standard costs or actual costs along that chain. So in the first instance, the group view and the local company view will be exactly the same. There's been goods manufactured in that first company, and I can see them in group perspective and legal perspective from the same point of view. As I move on into the second company, Company 2 sees those goods that it's received from Company 1 at a transfer price. All it's getting is rolled up aggregated information. I've bought 10 pieces from you and they cost $10 each. But from a group perspective, I have the cost component split behind it, and I can see not only the value of that goods movement with the intercompany profit eliminated, I can also see the detail behind it. So I can see what were raw material costs, what were internal activities, what were overhead, and so on. And that carries on all the way along the chain. Company 2 sells to Company 3. Again, from Company 3's perspective, they bought an externally procured good. All they're seeing is 10 pieces at $20. But behind the scenes, I can see all that detail in the group valuation view. And then the third view that you can see optionally is the profit center view, where as well as having intercompany transfers prices that are agreed between the legal entities, you have a second set of transfer prices that are agreed between profit centers. So if you think here of the profit centers typically as being quite high-level entities, so typically divisions, the idea is you're putting a second set of price conditions in that exist not just legal entity to legal entity, but also to division to division. And I would say of the customers that I've been talking to recently, about half of those that do the group valuation also put the profit center valuation in. So that's kind of our big picture. That's something that we lost in 1503. We didn't actually support that view, and if you tried to migrate in 1503 and 1511, we gave you a whole load of nasty error messages and said we can't do anything with your data. And from 1605, so the S4HANA Finance add-on, and 1610, that view's there again. We can now migrate it, and you can carry on as before. And of course, if you're greenfield, you can start from scratch. One of Paul's questions is also, what should I do first? What we technically do when we're creating this group valuation and profit center valuation is we're technically adding new currencies. At the moment, we haven't got conversion tools on the Universal Journal. So if you're really thinking that you'd like a group view or you'd like a profit center view or you'd like both, our recommendation is to set those up in your local system before you do the migration, before you do the conversion. At some point in time, I'm sure we will get tools for that, but we haven't got them at the moment. So to avoid any nasty surprises in a project, if you really want that functionality and you're not using it now, think about turning it on before you converge. So trying to explain in a little bit more detail what it looks like. When we have that actual costing turned on, when we have that detail, we always see the same schema. We've got the beginning inventory, we've got the ending inventory, we've got the goods that have come in, and we've got the goods that go out. And that's really the basics of material ledger and the basics of actual costing, that the material ledger is sitting behind every goods movement. It's writing down where it came from and where it went to. All the way along the chain, where did it come from and where did it go to? And that's what gives us the ability to do actual costing. It's also what gives us the ability to pass those costs along the chain. So what you see here is the information, the goods we have in stock at the initial point in time, the preliminary valuation typically based at standard costs, any price differences that have come out of purchase price variances or production variances, any exchange rate variances, another topic that I seem to spend a lot of time talking with people about at the moment because of the currency volatility we're seeing at the moment, and then the actual rate. And what you see in the legal view is you'll see that that intercompany purchase is all rolled into one material element. So the direct material element has got lots of costs in there, and everything else is zero. Because from that company perspective, they're doing arm's length trading. They're buying from another company in the group, and they're being sold that good as with an intercompany markup. The detail is lost. So all that I see in my cost component split is the total material cost, i.e. what I bought it from you for, and that intercompany profit that's been added. And now try and keep that view in your mind as I move on to the next slide, which is going to show you the same view from a group perspective. So I'm looking at the exact same transaction. I'm looking at it in the exact same period. The only difference potentially is that I'm in group currency rather than local legal currency. And what you see now as you look at the cost components is that the direct material cost has gone down. I'm really there just looking at the raw material cost that's rolled up through my entire production structure. And I'm seeing beside it the internal activities, the overhead, all the things that have gone into that cost component. And we're also getting a lot of people in this context looking not just at what happens on the shop floor, what happens as they convert raw material into finished goods, but also things like landed costs, how much are they spending on freight, how much are they spending shipping goods around the world. There's really a lot of interest in this whole idea of having a value chain and trying to get a group perspective on it. And if you think about what we're doing with the general ledger and making that much more granular than it was in the past, we're effectively doing the same thing here in a kind of pre-consolidation view. We're trying to really give you a line-by-line view of what's happened for every single material movement and two different perspectives. The one, the arm's length trading perspective that just says legally, I've bought it from you at a transfer prices of 10. And the other view that says, hey, we're all affiliated companies, we all belong to the same group, and here's the detail. I can give you the whole cost component split. And so I think that's something that I'm getting a lot of questions about at the moment, and I'm sure Paul's getting his share as well. So technically what happens behind the scenes, one of the things you might have heard is that we're going much more towards being a ledger structure. The driving organizational things within finance are becoming what I used to call general ledgers kind of settings. If you migrate, what will happen is technically we'll put both the profit center view and the group view into one ledger. We've introduced this new term, multiple valuation ledger. But if you think about it, it's really just the idea that you've got lots of separate columns in the Universal Journal. In one column, you're going to see the legal view, which is the intercompany transfer prices. In the next column, you'll see the group view. And in the third column, you'll see the profit center view. If you're greenfield, if you're starting from scratch, you've got the option of separating that data into different ledgers. So having a special single valuation ledger that's set up for either your group valuation or your profit center valuation. It gives you a little bit more flexibility in terms of setting up authorizations, who can see what. It also generates more, it's easier to separate in your reporting if you're working by ledger. I would say the jury's still out because we haven't had enough customers who've taken both approaches to really say this is the way you should go. But if you're thinking greenfield, it's worth thinking which of these approaches should you take. Of course, technically we've still got versions in CO and probably will have for a couple more releases. So there's always a switch customizing that says, technically in the old world, I had my legal valuation always in version 0, and I had 2 extra versions for my group view and my profit center view. And you can now map those to the various ledgers. So you can see in the first example, we've mapped everything to that single valuation ledger. So 0L, what you used to call the leading ledger and the general ledger. Or we can separate those versions and post them to separate ledgers. And that's just so we can keep all our reporting up and running until we finally get finished. So let's say transfer pricing, if you just want to take away the one key point, it's back, it's up and running with 1605 and 1610. We've had quite a lot of successful conversions. Don't be scared of it. Go ahead and do it. And if you haven't done it and you want to do it, don't wait till you convert. Do it now in your local system before you convert. Now, if we come to the next one, what changed in actual costing? This is where we've really gone to town on the new architecture. Actual costing 20 years ago had lots and lots of separate tables. Every time I tried to draw them out on a whiteboard, I used to get quite confused because it was really quite a complicated data model. And we've now gone to the opposite extreme. It's very, very simple. We're reduced to 2 tables. Of course, 20 years ago, we couldn't have built a table like that. It's only with the arrival of HANA as a technology that we've been really able to go that simple. If you look at the old world, we had quite a lot of steps in the closing cockpit. Some of them of a kind of technical nature, so you had the selection, which plants are you operating in. We had the define the sequence function where we would look and see, have you got co-products? How does everything roll up? Then we would calculate single-level variances, multi-level variances. If you switched on revaluation of consumption, we had that step. And right at the end, we had the post-closing step. From a user perspective, those three separate steps, single level price determination, multi-level price determination, and revaluation of cost of goods sold, will roll into one. In that example, I didn't have revaluation of work in process active. That will also roll into that one separate step, central step. So the closing cockpit, the actual costing cockpit's going to look a whole lot simpler. And now I want you to watch carefully to just see what happens to some of those tables. So you've got the old data model with lots and lots of aggregate tables. And I'm just hoping the build's going to work now. Oh, yes. So you can see the first level of simplification is that we lose a lot of the totals tables in the material master. So any view, any time you look at the material master, all of those transactions where you see total inventory by storage location, by plant, by sales order stock, and so on, all of those are basically reading views of the MacDoc table now. So it's a much, much simpler architecture. And the only thing that's remaining as genuine master data is really the genuine master data stuff that says, you know, what's the weight of this material, what's the profit center assignment, and so on. And if we click a little bit more, you see what happens with 1610 when we threw away half the material ledger, well, virtually all the material ledger tables, and ended up with two MLDoc. The MLDoc table tells me what the inputs and outputs were, so I know what I need as a basis for my actual costing. And then I've got an MLDoc CCS table, which stores the cost component split. You'll also find that the actual costing steps look a lot simpler. The calculation logic's been optimized for HANA. We've had some very positive feedback from some of our early customers that this thing really is significantly faster. And of course, I've spent the last 20 years asking mails saying, you know, I've got this many documents, this many materials, will actual costing even run in my environment? And then working with those sort of customers to actually make it run for them. The dynamics of when do I have to say, no, it's maybe not going to work in your environment have really changed dramatically with this new simplified data model. It really is quite exciting. From a business point of view, what you're trying to do hasn't changed at all. You're still trying to take the raw material costs, which have typically got a certain amount of volatility in them, assign them to your production orders, roll that through to your semi-finished products, roll that through, including any production variances, to your finished goods, and then capture at actual cost any work in process that you might have, or the cost of goods sold at period close. So from a business point of view, in terms of what we're actually trying to do, not very much has changed. But of course, from a technical point of view, life just got immensely simpler. So just to give you a little idea of the change management, what you see on the left is the new actual costing. It doesn't look dramatically different. The main difference is just that we've got that selection step. Preparation step actually covers two previous steps. We've merged the periodic costing run and the alternative valuation run here. So in the periodic costing run, that preparation step was all about looking what order I had to cost the different materials in. And in the alternative valuation run, it was all about looking at the sequence and accumulating. Both of those get subsumed into one step now, preparation. And settlement covers, as I said, the steps, single level price differences, multi-level price differences, work in process, and cost of goods sold, as in revaluation of consumption. We didn't change the account posting logic. So you'll still find when you do those post-close that you'll get single level price variances going under the one set of accounts, multi-level going under the other, COGS and WIP again separately. You shouldn't need to change your account assignment logic at all. It's just that the calculation becomes simpler and easier to use. If you look at CKM3 at the material price analysis, you'll see that there's cosmetic changes. There's new symbols that show where there's a material ledger document, and we've got the cost component split and that initial price determination scheme on the same page now. If you knew the old world, you'll manage with this new world just fine, but it is worth thinking about user manuals and so on and explaining that process to anybody who's going to use it, because the first time you see this screen, you kind of go, wow, oh, that's a lot of information. In terms of technical impact, I list these tables less because I think every user out there should know them, but because it's important to know if you've done anything with these tables of your own as you make the move. So in S/4HANA 1503, so with the initial introduction of the Universal Journal, all those tables that begin with ML, so MLIT, MLPP, MLPPF, MLCR, and so on, they all move into the Universal Journal, into ACDOCA. And what we used to keep in the header becomes part of the accounting document, so it's BKPF. And we've got tools that help you to analyze your existing code to see if you're doing updates to those tables. You saw the drama of my move with the actual costing structures. It's even more powerful what we did there. We've gone to from having lots and lots of tables to having 2. If you're really looking at a conversion project imminently, I would recommend you read the SAP note 235-2383, because that really walks you through technically what changes. One thing to be aware of here, in most of the things we did for the Universal Journal, we tried to keep what we called compatibility views. So we tried to convert things back into the old structure, which means that even after your conversion, if you're still using a report writer report that gives you the cost center costs, or you're still using drill down reporting on the general ledger, everything will work as before, and you'll only have the fields that you had in CO and FI separately. In the material ledger, we found it was almost impossible to build compatibility views. What that means is if you've done some serious work on your old tables, your own updates and so on, a lot of that's going to become obsolete. So you're really going to have to be a lot more cautious about understanding what happened in the past for actual costing. I know a lot of customers have joked with me about having their own Z costing. If you're one of those, you've really got to start looking at what changed here to understand what's going to be the impact on your coding if you do make the move. I think it's also important to think about currency in terms of the Universal Journal. It's something we're having a lot of conversations with customers about. And I think some of that has to do with the fact that they're trying to move a lot of that reporting that they've traditionally done in BW back into their operational system. If you're greenfield, you can go and fill whiteboards and have a great time about what your new currency options are potentially going to be. If you're migrating, hold fire on the whiteboard, because we still haven't got tools to create a new currency. Obviously, they're on the roadmap. We know we need them, but this is where we stand today. But I think it makes a lot of sense to think your way through your accounting documents. So every accounting document in the Universal Journal will be tied to a local currency. That's a no-brainer. That was always there. Currency type 10. It was always there, and it's fine. The difference now is there's a new field, HSL, so house currency in the Universal Journal. What's different is now, whether you like it or not, every single document is going to be assigned to the global currency. So it really is worth thinking, is my global currency really US dollars? And do I want to see every part of the world with US dollars in there? And then to start to think your way through the potential use cases for some of those other 8 potential new currencies. Now, in some cases, you'll already be using some of these. So historically, we always had 3 currencies in FI. So a lot of people had country-specific requirements. So they'd be using an index currency or a hard currency because they had high volatility, high inflation. A lot of people had the requirement for a functional currency. So you might have had a plant in Mexico that was doing most of its work with the US. So legally, it was required to keep US dollars. So just to give you a concrete example, I've been working with a US corporation who has plants in Switzerland. And what they've done is historically, they've had their group currencies always been US dollars. The local currency in Switzerland, of course, would be Swiss francs. And then they've had a functional currency requirement there that they need euros in Switzerland because that Swiss plant is mostly trading with the rest of Europe. So as you're thinking about making this move, it makes sense to kind of do a laundry list, try and really understand what your currency requirements have been in the past, and also what you're doing as you move data towards your consolidation tool, and to try and ask yourself if things could be easier if you captured some of that currency information earlier, namely in the operational system. And if you're greenfield, of course, you can then start to fill out these currencies. So if you're using transfer prices, you're already technically going to be using 2 or 3 of these fields for your local legal valuation, your group valuation, and your profit center valuation. These currency settings are ledger specific. So for example, the functional currency requirement, you might not have a requirement for functional currency in every legal entity you're operating in. Or you might say that you really want one everywhere. These are things that you have to think about in the implementation as to what your currency requirements really are. And of course, how are they going to be affected within the Universal Journal? One thing that we used to see in the past was a lot of people started with group valuation and did it in their group currency, and they did profit center valuation in group currency. What we're now seeing a lot is people that want the elimination, but they want it in local currency. So they're actually looking at 2 views of group valuation and 2 views of profit center valuation, the one in that central global currency and the other in the local currency, but just with the intercompany markups eliminated, with a view to doing that final currency conversion in their consolidation tool. Technically, what does it look like? If ever you've talked to material ledger gurus, they'll always be talking about 31 and 32 and 11 and 12. Those are technically the currency types that we use to represent group valuation and profit center valuation. Those are all still in there, and we can migrate them, no problem. The interesting thing is the idea of adding additional currencies. So maybe adding a functional currency, maybe adding a reporting currency. And if you're greenfield, I would really recommend you to think this sort of thing through, especially because at the moment, what are we at the moment, March 2018, we haven't got a tool for adding extra currencies and converting the historical data. It's a roadmap item. At some point we'll get there, but it makes sense to make these decisions and be clear what you're doing up front and get that currency information in place. What do those different options look like? If you make a conversion, this is what you'll get. Technically, your group valuation and your profit center valuation will be sitting in the leading ledger. They'll be sitting in ledger 0L. Essentially, they're just extra columns on that table. There's absolutely nothing wrong with that approach. No reason to try redesigning it. It's just that as we move forward, we're starting to explore the ledger in more detail. So here's a different approach where we said ledger by ledger, we're going to put profit center valuation, or we're going to put group valuation in a separate ledger. So these are design decisions that you need to make up front as you're designing your Universal Journal if you're greenfield. In terms of Fiori, I would say we're kind of right at the beginning. We've been under the hood. We've been redesigning the table structures. We've been redesigning the way you do actual costing. We've been making transfer pricing work again. And we haven't spent a whole lot of time doing Fiori yet. I'm sure that will change over time. What you will find, however, is that all the actual costing reports are visually harmonized. So you'll see tiles like this one. We deliver a role, cost account, and inventory. And you'll find all the tiles that relate to actual costing and to the standard costing as part of that role. If you're on premise, you can take that and organize them the way you like. What will happen when you click on those tiles, though, is that in most cases you'll just get the transactions that you had before, but in the slightly different visually harmonized look. And so, watch this space over the next couple of years as we start to convert. What I would like to do is show you one example where we actually have converted and really built a new application, and that's this idea of production cost analysis. So you'll see here, there's the tile. It looks a little bit more exciting than the previous one because it's already showing me some information. It's already gone and it's looked and it said, oh, you have 42 open orders, and it would give me status information. And the idea is I can select those. So I'm only looking at my open orders. I don't want to see the closed orders until I get into the application. And then I can dig down deeper. So here I've got a list. This is the standard Fiori pattern, so I've got a selection piece at the top, and I've got the detailed information. Which order is it? Are they hitting an exception? And then some of those KPIs. So it's going to be showing me things like target costs, things like actual costs, things like planned costs. It's reading off the production orders, it's reading off the process orders. And if you keep an eye on what's going on in the Fiori library, you'll see we're updating it every 2 or 3 months with new features, trying to make it better and better. So you'll see here the order details. In terms of the information it's showing, we had that information in the system before. We're just making it easier to consume. We're making it hopefully a little bit nicer. And this is going to be our way forward in terms of reporting views. Where we have gone deeper, and this is something that I think I've been being asked this question for at least 20 years, is that historically the CO data records never kept the information, what's the operation or what's the work center. So you had the information when you did a confirmation in PP, when you issued goods to the production order, you had that information, I'm at operation 10 and that's being performed at work center X. But we never had that information in CO, we just aggregated it away because we were scared of the data volumes. What we've done now is we've gone into the Universal Journal and we've said, we'd have managers that are not just responsible for a whole cost center, which is typically a whole production hall. We have managers that are responsible for individual work centers. And we want to be able to give them the information, not just how many production orders went by, but what the scrap was at each work center. We want to give them detail. So we've already started to change the data model in cost object controlling as well. And if you're thinking of Fiori, you're thinking production, I would have a look at this app. It can be a nice way of getting data, getting more details and finding out more about your production order. Of course, a little bit of shameless advertising. As Paul said at the beginning, I've written several books on these. Unfortunately, my books are being rapidly overtaken by reality. So the first steps in SAP S/4HANA Finance is it's up to date to 1605. I haven't yet got the information in about 1610 and 1709. I need to rewrite at some point. If you look at Controlling a Practical Guide in SAP S/4HANA Finance, I've actually started on the new editions there. So obviously I would love you to go out and buy a book tomorrow, but if you want to wait 6 months, you'll get the latest information about what's changing there. And of course, the questions that you ask in this, I'll try and drop some of them into the book so that the next people don't actually have to ask. And maybe this is a good point to hand over to and answer some of the questions that have been coming up in the chat. I have to admit that I've not really been watching what's been going on. I don't know whether Paul can help me to navigate my way through the questions.
Sure. Thank you, Janet.
Yes,
this is Maureen again. Moving on to the question and answer portion of this webcast. We've got a bunch, so I'll just start asking if you want to start answering, Janet and Paul. The first question, if my consolidation tool is BPC where the elimination occurs, can the group currency in S4 incorporate these eliminations from BPC?
Good question. So you have to check the version. I think it's with 1709. So in the very first delivery of BPC, it didn't. It essentially worked the classic way. So it went company code by company code, and the idea was that your elimination would always be happening in the consolidation tool. I think it was in 1709 there was a change to the currency, so you can take that group currency into BPC as a consolidation tool. At the moment, you would still be eliminating in your consolidation tool. But going forward, we're co-innovating with a couple of customers to try and work out what you would do locally, what you can do operationally, and what you would still have to leave in the BPC layer, in the pure consolidation layer. So it's very much an area where there's movement. And I think it's very interesting in terms of how you approach consolidation, because historically we've always consolidated on fairly aggregated data. So things like legal entities, business units, profit centers, and so on. And if you look at what we're doing with the group valuation, we're really going line by line, material by material, and eliminating the intercompany profits within those goods flows. So it's actually quite a different way of trying to do the same thing.
Okay, next question is from Dave. Is there any tool today or on the roadmap that helps drive transfer pricing determination?
So the actual calculation of the transfer prices, at the moment, you've got your normal standard costing run, you've got your normal SD price conditions. At the moment, we haven't got a tool that says, how can I set my transfer prices so that I'm left with my plant in Malaysia having a 3% profit? We haven't got a roadmap option to do that yet. At the moment, I would say that's something you do in a separate tool. Things might change, but not at the moment.
Next question is from Rich. I assume the IC profit can only be eliminated if the affiliate entities are on the same instance of SAP, correct?
That's right. So at the moment, the requirements for the multi-level actual costing are that all the entities are on the same instance. Going forward, obviously, we're looking at central finance. Obviously, this will change at some point in the future, but at the time of writing, we can't actually we can't transfer cost component splits and that intercompany information between systems. Essentially, where you've got a system break, you're very definitely going to have everything rolled up into one intercompany transfer price, and that's all you'll have.
The next question, having calculated the IC profit, does SAP provide any support for deferred tax calculation on profit and transfer price till the goods are sold to the third party?
I'm not sure that we do. Obviously you've got the base data to see, what that intercompany profit is going to be showing you is how much of your intercompany profit is hiding in an inventory, so how much this is in work in process, how much of it is in stock in transit. And obviously there can be a long time in the chain before the goods finally get to the final customer. So you've got the base data, but we haven't got any tools yet that allow you to do different tax calculations there.
The next question, as ML will be active for all company codes, will CKM3N be available for units without actual cost?
I'm pretty sure it is on. The point is that there won't be very much in it because you won't have the quantity structure being updated. So you would have the information in terms of the quantity and the price, but you wouldn't have the cost component split, and you wouldn't have all that detail because you need actual costing to update that quantity structure to say, what were the inputs and what were the outputs, and to roll that cost component through the structure. So technically, you'd probably see something, but not very much.
Next question, can we turn on transfer pricing and AMP multiple valuations after on S4 conversion/migration?
At the moment, no. There isn't. There used to be an old note that explained how to turn on transfer pricing and so on. We get a lot of questions about it at the moment, but my answer today is do that conversion, do an SLO conversion in your local system, and then migrate. It's on the roadmap. We know we've got to fix it at some point, but we haven't set a date yet. So I guess the answer is it depends how imminent your project is.
The next question from David. We produce aircraft. We activated ML ACT, but company is thinking on deactivating ACT because of the complexity, specifically on the accounting side. What is your recommendation? Is it going to be less complex on HANA?
I think I would have to look at the individual problems there. It's hard to make a sweeping generalization without knowing anything about the company, the background. Obviously, I know aircraft have a lot of parts in them, and it gets pretty complicated. It should become easier because you've got this one table, the ML doc, that's going to record all your inputs and outputs and also store the information about the evaluated project stock. But I think probably the best thing to do is if David sends me an email and tells me a little bit more about his project, then I can give him a better answer.
The next question, do we have information by storage location?
In the material tables you do, but the actual costing isn't based on storage location. All you've got is the procurement alternatives of your way of splitting, so you can split, for example, what did I get from an individual vendor or what have I done in subcontracting? But essentially we say inventory is inventory, and the only separator in the inventory are the valuation types. So things like, is it batch valuation, sales order stock, inventory, project stock, and so on. But I don't think it splits by storage location.
Gary asks, when converting to S/4HANA, only the current year plus the previous year plus December of the year before that is migrated to S4, why only those periods?
That sounds like a central finance conversion, because if I'm doing the universal journal conversion, I convert everything. So, you know, if I've got 20 years of history, I convert 20 years of history. That's what makes my migration so big.
And a follow-up, will the actual...
typically say don't.
Go ahead. And we'll move to another question. Will the actual costing have the availability to integrate FIFO valuation via using an alternative valuation method through configuration using the key figure scheme, defining an external DING inventory valuation using FIFO?
I mean, if you've got the FIFO values, I mean, there is a FIFO based on an actual costing. I'm not sure if there's been any changes there. If somebody wants to drop me an email, or if you just want to send me the details, I'll try and come back to you on that one later.
And do we need to convert to ML before moving to S/4HANA?
No, you don't. So if you just want the multiple currencies, but essentially you don't want actual costing and you don't want the transfer pricing or the group valuation rather, then you don't need to do anything. You can just wait and the conversion will do it for you.
When we move to S/4HANA and we have custom reports, will we need to modify the reports to map to the new tablets, or are there new compatibility views?
We don't have compatibility views for actual costing. So if your report's kind of your own version of CKM3 or whatever, then you will need to rebuild those reports.
And if we move to S/4HANA and we want to activate group valuation, do we need to do an SLO beforehand, or can we convert automatically when we go to S/4HANA?
At the moment, you would need to do an SLO beforehand. We haven't got tools yet, because technically adding group valuation is adding another currency, and we haven't got tools to convert the historical data yet.
Another question from Jeffrey that came in. Have any moves been made to make inventory issued to vendor or inventory issued to customer non-plant specific?
Not that I know of. I mean, it might be a little bit of help if I could have a little bit more background on the requirement there.
And this looks like our final question. Since there are now 8 currencies in the Universal Journal, does that mean that we can combine each of these currencies with any of the valuation views?
In principle, yeah, you could have, I don't know, group valuation in functional currency if you wanted to, and that's something that we've been talking through with some of our co-innovation customers, that they've said they like, obviously you would have the legal view and the group view in company code currency. We could do that up till now. That was 11. And obviously the corporate view, so in most of the people on the phone, it's going to be in US dollars. But some people are really starting to seriously think about what would be the impact of having a functional currency with that valuation view attached. I haven't seen anybody that's done it yet, so I can't really talk about, it's too early to talk about best practices, but that's one of the things that people are thinking about.
Well, thank you for the question and answer session, Janet. I'll leave you with any closing remarks, and then you can hand it back to me, and I will end our webcast today.
Okay, nothing much. Thank you very much for joining. I hope it's been helpful. I know there's a lot of confusion out there, and I hope I've answered at least a couple of questions for people. And yeah, thank you for taking the time to listen.
Yeah, and thank you, everyone. And, you know, there was a lot of questions with this webcast. For anyone who's attended a webcast before, they know that we will make sure any question not answered, we will answer them, and we will send an email to all the attendees to give them the answers to all the questions. So Thanks a lot, Janet, for that, and hopefully it was useful to everyone.
Thank you, Janet and Paul, for a great webcast. On behalf of ASUG, I'd like to thank ERPfixers as well as all of you who took the time out today to attend this webcast. Before we go, I'd like to leave our audience members with some quick information on ASUG for anyone unfamiliar with our organization. ASUG helps connect SAP customers to the people and information that provide the insight and influence and inspiration they need to maximize the return on their investment in SAP and drive innovation at their organizations. We offer 38 chapters, 90 special interest groups, and access to digital content like this webinar. If you'd like more information, please message info@asug.com. The recording and slides from today's program will be posted to the ASUG website, and all registrants will receive an email with a link to those materials. Please take a moment to complete the survey by clicking on the green button at the bottom of your screen. And with that, I'd like to close today's webcast. I hope everyone has a wonderful rest of their day.